here to wrap up the week and wrap up the month. Hope everyone's doing well. Let me bring up the YouTube page, make the rings come through loud and clear. If you're out there typing a wire, yes, if you can hear my voice. Risk disclaimer coming at you. We understand the risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the dealio. All right, let's get to it. Hey everybody, nice to be back at the helm in the home office. Fun week in Orlando. Busy session at the Market Traders Anniversary event. And hopefully see some familiar names in the chat. Marilyn, good morning. Jason, good morning. Don, what's happening? Donna, good morning. All right, sounds good. All right, we are live. Let's go. So, markets kind of clinging to some semblance of optimism. We are pre-market down. I want to take a look at futures here for just a snapshot. MarketWatch.com. Futures pointed a little bit lower. So we have a drop on the Dow futures, drop on the S&P futures, drop on the Nasdaq futures. Gold, 1909. Silver off the lows, 23. I saw lows this week around 22. Oil climbing a little bit higher off those 95 support levels at 106. So we'll take a look at dollar index, gold, silver. We had a lot of Forex discussion this week at the anniversary event. I did pick up some really good trades that I'm pretty excited about. A lot of it's dollar index related. So we'll talk about that in Forex. Also, I have about 11 expirations I need to be managing for today. We have class at the top of the hour for equities on demand, and we will discuss. And yeah, just another day in paradise, I guess. So it is the end of the month, and things didn't get super wild this week, but they were pretty intense. We had a lot of dollar strength. We had a lot of JPY volatility in the Forex market, but managed to pick up some good trades on pound Swiss. I like the levels I'm in on pound CAD. I started to nibble at the pound dollar. EuroCAD's another one I'm watching pretty closely. And, we had some opportunities on the JPY to collect some pips this week, but we are, seeing some pullbacks, and I want to look to see if I can sell those highs once again. So we will discuss in today's session. All right, but nice to see everybody. All righty. Pre-market down on the SPY, just a little bit off of yesterday's push. So we had a really aggressive close yesterday. Earnings-wise, let's see. I think I have a screenshot of earnings. I've got a bunch of chart alarms to review from last night and this week. So 29th, 28th, 27th. Really this week as I was gone, just a bunch of chart alarms triggering. These were the earnings that we were watching very closely. Microsoft beat earnings. Google did not. Visa was fine. QuantumScape fine. Chipotle, slight miss. Meta, surprise to the upside, like 18% actually. Ford was slightly lower. PayPal was good. Pinterest was fine. I think it acknowledged TikTok as a bit of a threat. Spotify, I believe, missed. We can take a look at that one. And then Twitter, Apple, Amazon. Amazon had a miss. Apple was fine. Intel was solid. Roku was solid. And we still have earnings today before market, which are probably already out. So Exxon, AbbVie, Chevron, AstraZeneca, Bristol-Myers Squibb. But markets look like they're down a little bit, holding these lows pretty nicely. Going into the end of the month, we start May with a Fed rate decision, May 4th. It's pretty much priced in. I'm sure that I wouldn't be surprised if May and June rate decisions are priced in for the Fed, and that would be right here. So next week, 99.1% probability that the May 4th FOMC rate decision will be a 0.50 basis points increase, because right now the current borrowing rate is 0.25 to 0.50, and this would jump them up to 0.75 to 0.10. So that window is a 50 basis points hike, and then you go into June, and our probability is quite high that we're going to have a 0.75% interest rate hike. So the Fed is well behind the curve. There are arguments to be made that peak inflation is already behind us and things are starting to settle, but the Fed is way behind in raising. They've been one of the last central banks to be raising rates. It was discussed last year. I mean, November was when the Fed was announcing it's going to start tightening, when it's going to start raising rates, and the market started to deleverage and react to it. And here we are. It finally took until March for the Fed to make that first barely 0.25% rate hike. So again, the Fed. All eyes on the Fed. What does it mean for the market? Well, a 30-year mortgage rate is still hanging up above 30 or around 5%. Let's go daily mortgage news. Daily mortgage news. Mortgage news daily. 5.40. Wow. So we're well above 5% on the 30-year. TNX, 10-year Treasury. If we are above 3%, That's also a potential problem for some exodus for fixed income. Had a really interesting discussion about this week. I mean, think about the trillions of dollars in wealth from baby boomers that are looking to retire, looking to have way less risk in the markets. Okay, so they reassign that capital elsewhere, take profit. They're sitting on cash. What do they do with it? Do they dump it right back into the markets, or do they dump it in something like a 3% yielding 10-year treasury? I know it's 3%, you're losing, potentially 4, 5, 6, 7% to inflation. But if inflation is going to plateau and start to decline, at least there's preservation of capital. And, cash is not a bad place to be, especially if things get a little bit squirrely on the additional decline. Volatility index this week. Pretty big ramp, right? This was last week's volatility index. This week's volatility index, we are pushing up towards these recent highs. Again, we could have a little bit of retreat if the market catches some footing, but we'll be watching. We have bullish on, this is today's candle so far. So yeah, we're bullish on the day for VIX. The VIXs made a pretty nice run to the upside as well. In fact, off these recent lows, the VIXy from last week is up 35%. Pretty decent. Also looking to see if we can come back and reclaim these $24 highs. I'm also in the VIXM, and I got rid of a covered call in this one, so my 27.95 ownership is running uncovered. And I'm going to take a look at this one actually today in class for Equities on Demand to see if I want to cover it. Maybe I do, maybe I don't. I'd like to lose it at 35 or 36. Maybe I can get some decent premiums off this 34.50 level, lower my cost by another 50 cents or a dollar. And if it goes up higher, I'll try to lose it within the next week or two. If it gets pushed back down, then I won't lose it. But I'm not ready to take profit yet. I want to see if I can take some profit up into this $40 level. We have really nice past support around $36 and $37. I'm going to see if we can come back up and tag these highs. But what I don't want to do is I don't want to push out my covered call too far, because in the event that I do that, I'm going to have to eat that covered call. So I'd either rather leave it uncovered and let these chart alarms activate to the upside, or I start covering it more near term and just do something where I can collect a little premium every week or two. So we'll discuss that at 10 o'clock. Any requests, feel free to jump in, make some requests. If you have some charts you'd like me to take a look at, whether it's cryptos, Forex, stocks, whatever, that is cool. Bitcoin. Been watching Bitcoin. We're off the recent lows. We're back to the recent lows, rather, 38,000 support. I did take a nibble at 38.8, so I took another bite at Bitcoin here. I'm looking at 35 and 30 as well, just in case we can level in a little bit lower. We have a nice little pivot here around 43.6. We have our range highs around 49 and change. I want to make a note of this. I was discussing this week. Bitcoin has been performing fairly well. Okay, now it's not up for the year, but Bitcoin's down around 18% from start of the year to current. Now 18%, make a note of that. I'll make a note of it. Okay, the SPY. So Bitcoin's down 18%. The SPY, current price, if we open right here, the SPY is down 12%. Okay, the Nasdaq, I'll look at the Qs. The 4 Qs, we don't have that one. The 3 Qs. We're off the lows. We're pre-market coming back down towards the recent lows. Off the highs, this is probably pushing 20+% or close to it. Pre-market, we're at 21%. So tech Nasdaq is actually down further than Bitcoin. DIA is probably the least. I would imagine around like 8 to 10%, but we're going to find out. So off of that level, we're around 9% on the Dow. So 18% on Bitcoin, 12% on the SPY, 21% on the Nasdaq, and Dow is 9%. Again, everything is down for the year. It's hard to find a place, right? It's hard to find a place to figure out where's my money going to be treated best right now. However, I do think that the upside potential and the hedge on Bitcoin is pretty optimistic. We're having some pretty strong support here at 38. Could we drop down and have a bear trap towards the lows at 30? Yes. But if I'm not mistaken, current mining costs are around 35K. So as long as we maintain that support level, I'd like to see Bitcoin get some love back up towards 50 plus. If we make a rally to 50 plus, what is really appealing is what does the stock market do at the same time? If Bitcoin makes a run to 50K and the stock market is still sideways or down off these recent lows, you're starting to notice a little bit more stability in crypto, a little bit more love in crypto, and that potential, transition and decoupling where cryptos are behaving on their own. They're kind of on their own little island now, but it's not there yet. So everything is down. We get it. It's risk-off trading for now. But if the stock market gets a lift, I'm sure Bitcoin makes its way back up as well. change the color so it's a little bit easier to see. Make sense? All right. Morning, Denise. Morning, Russ. Joe, how are you? Wayne, good morning. Thanks, Don. Appreciate that. Okay, so that's Bitcoin. Ethereum's going to look pretty similar. Channel trading is Ethereum back down to the lows. Not quite. So 28.50 right now. Lows are on 26.60 if we use this channel. And I was looking at a measured head and shoulders. We could have, 1, 2, 3, 4, 5. If it's just going to be channel bound, we can come back and find this pivot cluster. So this bullish head and shoulders projection was based off this earlier move. I don't think it's not as valid as it once was. And I also think that this Bitcoin double bottom target, it's not really holding as a double bottom. So I'm going to go ahead and delete this. We have a larger channel to look at, which is way up here. So this structure holding this support area, making its way back up to those highs, that's where I'm looking for, 70 to 75K. And with the extra momentum, it might surprise us to the upside between 75K and maybe all sites are set to 100K. We don't know yet. Okay, but anyway, I'm watching. I like the levels. 38, added some more. 35, 30, I'll add some more. Okay, all right, let's take a look at the dollar index, oil, gold, silver. Dollar index, a nice indecision candle / dark cloud. That's a bearish candlestick pattern off this daily time frame. Look at the currency strength chart for today. It's nice to see that the Swiss and the dollar are the weakest. Okay, Aussie's up here, JPY's baseline, Euro's a little bit softer. This is one thing I want to talk about. Flex traders will talk about this a lot next week. I think this is important. This is a really important theme moving into the rest of the year. The market has clearly moved aggressively on dollar strength, but I think this is the move that prices in the rate hikes that the Fed was coming with, right? They're looking to raise 0.5 next week. They're looking to raise 0.75 in June. The Fed's trying to quickly get ahead. If they raise, that would be 1.25 plus the current rate. So we're at 0.25 plus another 1.25. That would put the federal funds rate at 1.5% by June of this year. So that does give them some wiggle room that will bring them up and pretty much match every other central bank that has been raising rates. Not every central bank, but one mainly. The Bank of New Zealand. RBNZ is up to 1.5%. So New Zealand is 1.5% after a 50 basis points hike in April. That was April 13th. We still have the Bank of England that's sitting at 0.75. They had a rate hike in March. They're also looking to continue to raise rates. BOC, Bank of Canada, is at 1% after 50 basis points hike, and they're also looking to continue to raise rates. So it's allowing the U.S. to catch up. I think that's why the dollar was pushed, very aggressively. We also noticed some very strong, aggressive capitulation moves. So, euro dollar, for example, dollar index up here near these multi-year highs. Take a look in the weekly time frame. Okay, now what I talked about this week is how does this candle close today? If we close with a long wick to the north, could be putting in a bit of a top, right? If we start to pause here, we start to break this trend line, we could be putting in a top. And this would be multi-year range trading. So we have resistance. We had kind of a flash crash move that came back down, resistance, and we're heading right up here again after a fifth wave move. So I'm looking for at least an ABC correction, and it might turn into a top that transfers all the way back into range trading. Now, the reason I think this could be very possible for a range trade on the dollar is because as we think about the central bank with a bell curve, okay, positive being this is where central banks are raising rates, negative being this is where they're staying dovish. So dovish, hawkish, right? Dovish on the left where they're negative interest rates or zero interest rates, hawkish on the right where they're raising interest rates. Now, nobody right now in the world is saying that we're raising interest rates because our economy is super, super strong. They're raising interest rates because inflation is high, right? So that is a concern, and that's why stagflation keeps coming out in the headlines. So banks are raising rates out of necessity because inflation is high. But Bank of England, Bank of Canada, RBNZ, the Fed are all raising rates. The Euro, the JPY, the Swiss, not raising rates. The Euro is supposed to, by July or September, be looking to raise rates for the first time since I don't know how long. I think we looked at it in Flex maybe since 2012 when they actually had interest rates. But the Eurozone, since Mario Draghi's tenure, they've been at 0%, negative 0.1, whatever, negative 0.1 for a long, long time. And Christine Lagarde took the helm, and they're not talking about raising rates until it's absolutely necessary. But they've got enough drama on their plate with the Eastern Europe crisis going on and conflict right now. So again, do they raise rates? Maybe. But all I'm saying is this is my point. Rates are moving. Banks are making some moves. Banks are jawboning, finally starting to raise rates for real. And we're going to see this policy divergence where, okay, the market's pricing in all these rate hikes by the Fed. And then they're going to start looking at other central banks to start rebalancing. So the dollar has all this strength, and over the next 3 to 6 months, the euro, it's kind of the ECB's turn to raise rates. So we could see the euro get beat up like it has been, and then the euro can recover and rebalance the market. Euro dollar, for example, comes down to lows at 105. We could have the euro dollar rebalance to 110, something like that. 110, 115 is doable, right? But we're going to have to see those structures in place. I'm looking for lows to form, looking for bullish patterns of confirmation, and we will see how it plays out. So we're watching carefully. I certainly want to watch this dollar index as well. But it's going to be a pretty wild year because it's pretty much every central bank for themselves, every economy for itself. Who can fight inflation the best? Who can keep the markets from panicking? And that's the state of the markets. It's like everyone's trying to hang on. There's so much uncertainty. Our heads are spinning like crazy. Commodity prices are still appreciating. Oil, is it going to go higher or lower? Nobody knows. So it's a wild year. Okay, oil. Speaking of, we're at 106. Here's the daily time frame. So we're still holding that really strong support at 95. Have we taken out recent highs? Not yet. Okay, not yet. But with oil prices going up, we're going to continue to see asset prices remain elevated. I do have this inflation. Let's see, inflation rate by country. And let me look at the G20s and organize this highest to lowest. So the US is still sitting at 8.5. The Euro area is 7.5. United Kingdom 7. So I mean, Greater Europe is still in high inflation territory. So is the US. And by next month's reading, we'll see where that goes. GDP wise, curious where we have GDP. Okay, last reading on GDP. Is that annual? I was looking for quarterly. GDP growth rate. Let's see if we have GDP growth rate. There we go. So let's go last. Anybody have high GDP? United States, negative 1.4. So not good, right? Australia, 3.4 positive GDP. Canada, 1.6 positive GDP. China positive, UK positive. I mean, GDP numbers coming out positive are good. I am noticing here that that's also December of last year. So this could change very quickly with a Q1 reading. So we'll keep an eye on that. Anyway, more stuff to talk about. Okay, that's oil. Gold, silver, take a look. Keith, good morning. Sterling, good morning. David Hunter predicts a melt up as much as 60%. Melt up in what? Melt up in oil? Melt up in what? Specify. Gold. High to low, lower high to lower low. I projected symmetry, which I'll have to modify here if that was our recent high. And that actually works out perfect. High to low, lower high to lower low. I still think gold has some more room to the downside towards 1830, 1835 or so. But I'm very interested in buying gold there. Scoop it up at 1835. And if it comes down lower, scoop it up at 1700. But I think we could have a nice little correction on gold. We have a massive range to trade. If I go back, we're talking this breakout point around 2020. This is June 2020. Highs in August. Retested the lows back in March. Retested the lows back in August. This is all last year. And we peaked out here in March. That's when we saw oil at 130. We kind of had, and really that's kind of the sign of that potential peak inflation. Okay, so gold still watching. Maybe some downside potential. Silver. Silver's been on the decline pretty sharply, which I'm still hanging on to silver. I like this play. Silver is definitely a recession play as well. This area, let me just use a box. That's pretty awful. My art skills are lacking this morning. So that area, $22 on silver and $19.50 on silver. Those are areas that I want to buy. I was wondering at first when we had the structure if silver would hang out here and hold this trend line break and then find a way to muster the courage to get up to 29, 29.50. That didn't happen. The dollar strength really squashed that momentum. So dollar strength is what kind of sunk silver here recently. Same thing with gold. So if we're about to see a turn on the dollar, I could see a turn for silver as well. Maybe we have some more range-bound trading before we make our way back up to 29 plus. Okay. Oh, stock market. Yeah, I could see that. I mean, I could see it. I mean, I'm looking at the fundamental data. I've talked to traders before about Jordy Visser, guy at Weiss Capital Management. I love what all he does is use a Bloomberg terminal and just talks about correlations. It's actual data, not speculation. It's all data. I love that. And I mean, there are a lot of signs pointing to recessions not anywhere close. It's in the headlines. Inflation's everywhere. That's all we read about. But there's data pointing out that we've hit peak inflation. There's data pointing out that once we have, China coming off of COVID lockdowns, you're going to start seeing shipping and frictionless economies again. But it's going to take time. We have a demand boom still, but we have a supply issue. So we still are resolving supply chain issues globally. And I think that's where there's a slowdown. Doesn't help that you have Russia, Ukraine still going too. So that Eastern Europe conflict is not helping anything. Plus, you time that with historically high bearish sentiment. I mean, that's why the markets are on their heels. But I could see them melt up because it's low volume. It's like nobody's necessarily selling. We don't have panic selling yet in the market. But we also see that the money that's going in, there's still a lot of capital inflows coming into those ETFs. So, I mean, you're looking at, the SPY inflows, you're looking at ARK inflows, you're looking at, wealth fund inflows, BlackRock, Vanguard, tons of inflows. I think I had an article here, ETF, commodity ETF. There it is right there. This top 10 ETF Q1 Inflow Leaders. This was crazy, $85 billion, even after a rough quarter. Vanguard, Schwab, iShares, ProShares, Gold Trust, Total Stock Market, okay, Vanguard Value ETF. These top 10 ETFs saw over $85 billion in inflows. ARK, ARKK, Disruptive Technology, 3 to 5 year outlook, Kathy Wood, which is doing horrible, by the way. It's down like 67% for the year, or from the recent highs, rather. It's down like 30+% for the year, but still had $1 billion+ into it. So there's still money that's going into these funds. All right. So there's not panic selling. I think there's still buying the dip, dollar cost averaging, putting money to work, not trying to lose to inflation. So I could see the melt up happening because there's not really aggressive sellers on the other side. Any U.S. brokers that support allow trading to Bitcoin dollar? There are. I don't know, but I mean, well, what's the other one? There's Bitfinex. There's Binance. I'm trying to think. If you want to actually trade the currency instead of just buy and hold, like I don't trade Bitcoin. I invest in Bitcoin. So I use Coinbase, put it on a ledger, use Coinbase, put it on a ledger. That's just the easiest way for me to transact in it. But I'm not a, day trader, so to speak, on crypto. But I don't know. I can find out. I'm sure we have traders out there that are doing it. So I can find out. All right, so we did gold, we did oil, silver, we did Bitcoin, we did Ethereum, we did dollar index. Let's take a look at some other currencies. I'm just going to do a quick snapshot through. I'm long on Aussie CAD. Picked up a couple of extra buy trades here on Aussie CAD. 91.30 was this monthly pivot. Took a buy trade here at 91.75. I'm looking for this, and I'll take a buy lower. If we get a trade lower, Aussie CAD, New Zealand CAD, I like long on both of them. I'm looking for this. If we come down to this low, I'm looking for a bounce back up. We have a weekly pivot. We've got some pockets I like to trade back to as well. So I'm going to stay long in Aussie CAD to allow this to rebalance. Also, I'm not sure if we're going to go much lower here. If we do, I understand that we can come all the way back down to this channel low, but I'm looking for this to still stay either channel bound, a lot of consolidation, or because we broke this structure here, low to high swing, pull back, and then we have another push coming to the upside. Not sure yet. So I think what I'll probably do with my long positions, if we come back up to these equal highs in this box, then I will be taking some profit. So I added a small position, I'll add more down here. I'm going to dollar cost average in, and then try to go after that green box. So that's Aussie CAD. Aussie Swiss I'm staying out of. Aussie Yen, I'm looking to see if I can get something back up at the highs. It's not ready yet. We talked about the Yens all week in the anniversary event for market traders. So I'm looking to see if I can maybe sell it at the high at 95.70. I'm just watching. Or we come into trading next week and we look for a more aggressive trend line here. Very simple. Wait for some confirmation. We have a high to low. I'm looking for a lower high to lower low. So if we have a nice clean trend line break, we can look to get involved with that and have more downside. If it comes back and retests the same high, but it's the backside of the trend line, I'm still looking for a fall back down. Okay? So in the near term, I'm looking for some yen strength. I am watching the Nikkei 225. And I did get a chart alarm. We've been fading back down to these recent lows, but watching closely. Aussie New Zealand trading at 109.70. I'll go to the daily time frame. So this is an interesting one because we're in such clean open space structure that I'd like to say that I'm long Aussie New Zealand. But this is also such a super efficient currency. Here's what I'd really like to see. If there's any way that this thing can come back down to 108 or come down to 107, I'd love to pick up a buy trade there and just stay long. You know, I would feel like I'm missing the trade if it's going up to 113 without me, but this usually isn't a strong trending currency. You know, we had a trend. We bought the Aussie New Zealand down here. We took it all the way up here to 108 with a great trade. I've been a little reluctant to stay long on it. Okay, we took a breakout trade at 108.90, took about, I don't know, 70 or 80 pips out of that profit. There's a break-even trade in there too. So if we get a pullback in Aussie New Zealand, I'd like to buy that dip between 108 and 107 and stay long. But if it just keeps drifting higher, I'm probably not going to trade it. I'll probably sell it higher at 113 or 114 and then let it drop. Aussie dollar. I'm pretty interested in the recent lows. Recent lows around 7,000 and possibly some pocket levels around 67. So again, you're seeing some dollar weakness today. We have some reasonable pockets back here at 73.50, but I'm not ready to jump into Aussie New Zealand, or I'm sorry, Aussie dollar yet. If we come back to these lows, right there on 70 and right here at 67, area 1, area 2, I can trade a channel and possibly even trade a channel break. So if this drops a little bit lower, pretty interested in scooping up some trades probably next week in Flex. We'll keep an eye on that Aussie dollar. CAD Swiss. This one we closed out for some really nice profits. We're sitting at 76.28. There is room on this currency. Man, I want to pull back so bad. Give me a pullback. This is looking like a fifth wave move. I'm looking to take this up into these highs at 79. We have a massive pocket up here to close at 80 and 81. Any dips and pullbacks, I'd like to have the CAD Swiss be a buy trade. So if we break up here, we retest, I'm looking to go long. I can't chase it at the highs. All right, I need to see a dip or a pullback or a pause on the CAD Swiss first. CAD Yen, all the yen pairs are very similar. Okay, watch the daily time frame, watch the 4-hour time frame. Look at this. We're right back to the highs. So just chillax. You know, I mean, if we end up making a slightly higher high, I'm going to look for this high, slightly higher high, watch for divergence, and then we try to fade that move back down. Traders in Flex, we can look at the sentiment strength lines, look at those line breaks, and try to take a nice 8-hour trade like we did here. That was a nice 250 pip move. So we can look for some confirmation to align and try not to do anything silly. Okay, Swiss yen. Swiss yen, frickin' drop. It's not there yet. It's a long ways away, but we have tons of inefficiencies to trade back to. I would love to see if this thing can get back down to 127 or lower. But my question is, are we going to go to the historical highs at 136 or 137 first? I don't know. Or is this a 1, 2, 3 wave move? If it is, I'm looking for pockets and pivots to get filled, past resistance to get tested. We come down to 127. I'll make an assessment there whether or not I'm going to stay in the trade or get out. I'll be in profit if I hit 127, and I'm looking to protect it. But I'd obviously love to see this thing drop a lot more. We have a yearly pivot all the way down here at 122.80. We have a yearly pivot from 2021 all the way down to 114. So there is certainly some potential for an awesome top to form, historical highs. It might take some time, but when this thing settles in, I think we have 500 to 1,000 pips to the downside. But I don't want to be stuck on the wrong side of it either. Euro Aussie, anything here? Hopefully we see a nice little pullback in a buy opportunity. I'm looking for if we can get it, we have a left tip structure over here. I'm looking for a right tip around 1.46. So if we have 1.46 and we bounce, I look for a buy trade there. Otherwise, we've discussed a potential double bottom at 1.44. But I'm going to wait for price to come to me. Euro Canadian. Euro Canadian pushing sharply to the downside. I have some pending buys at 1.30 and 1.26. So this one, just wait for a trend line to break. So this one, wait for a trend line to break. That's going to be the safest confirmation right there on the daily time frame. And we'll wait. It's tempting. We're nearly oversold. We're showing some pretty clear divergence right now, but I'd like to see this thing register oversold conditions before I take a trade. It's close. Okay, Euro Swiss. Euro Swiss, another candle that just isn't following through yet. That is unfortunate. But we have highs at 103.60. Recent lows are holding at 102 down to potentially 101. There's still a lot of indecision on the Eurozone. And again, I don't know if the big change in the Euro Swiss has to be that the Swiss will maintain their negative interest rates and the Euro is going to start actually raising rates. If that is the differential that starts to drop the Swiss and favor the Euro, bring it the F on. Christine Lagarde, raise your rates. Okay. Jordan from the Swiss National Bank, cut rates again. I'm just saying, like, I like this trade. 1.00 parity. There's clearly some important levels there to watch. We've had we're near the historical lows of the Euro Swiss. I'm hoping that this ends up creating an awesome bottom for us to trade and a big opportunity to the upside. So first and foremost, I'm going after 106 and change. If we have a follow through, I'm looking for that swing all the way back up towards 109 plus. But I'm going to take this in phases because I'm in enough trades that would be a nice chunk of profit, and I'd look to get back in and go after another chunk of profit. But this has been a bit of a saga for the last 9 to 12 months. Okay, all right, that's Euro Swiss. Euro Pound, trade the range. This one's really solid. Pound Swiss, I picked up a buy trade this week in Flex at 21.15. It's working out great. We're up about 80 pips right now. Pound Yen, waiting on some of these yen crosses, right? High to low, lower high to lower low. I'm looking for that drop. We either have an equal high or look for a trend line break next week on pound yen to drop towards 157. Pound New Zealand, I'll wait on this one. I do like the opportunity here for a buy trade, but I'm going to sit tight. Pound dollar I like better. Pound CAD, pound dollar I like better. Pound CAD trading at 59.75. I picked up a buy at 6005. Also, crazy oversold. I love it. Okay, now I'm not saying that 6,000 is going to be the bottom, but I'm very interested in looking for a low to form and trade this right back up into 6250 or so. So traders in the flex room with me, I'm in at 6,000, right? 6005. I've got another order here around 5775 and 5800. If we drop a little bit lower, I'm looking to scoop up some small buy trades, get some confirmation, add to that trade, and add once we have confirmation, go back up towards 6250 or beyond. I think we can make our way back up to 6250. I think we make our way back up towards as high at 65. But I'm looking for a really nice low to form on EuroCAD, PoundCAD, hopefully soon. Pound Swiss, like I said, picked up a buy trade there. That's looking good. Pound New Zealand, I'd like to see if it drops back down to lows, but it looks like we have a potential crown pattern where we could fall back into like 9,000. I told everyone this week in the anniversary event, 9,200 to 9,000. Watching for some support to form on pound New Zealand. Pound US dollar. I know I'm flying, right? I know I'm going fast. It's fine. Watch it again if you have to. Pound dollar. I didn't pick up a buy trade. I'm waiting to see if this thing wants to drop to something crazy like 1.20. Okay, maybe it does, maybe it doesn't. So here's what I will say. If we have a capitulation move drop, a little pause, and another flush down, I'm looking for a super aggressive trend line, 1.20 to 1.16. I'm going to start buying pound dollar and take this all the way back up to this drop and break out around 1.30. Another what I think is a really good opportunity for some, historical low trades that we can buy. Okay. But I'm not scooping it up right now. This might be a break, a pause for today, a little relief rally, some profit taking, and then we drop a little bit more going into next week's FOMC on Wednesday. Right? But if it comes down low enough, I am scooping up pound US dollar at 1.20. New Zealand CAD. I am long in New Zealand CAD. I was up this morning. Now I'm not. No big deal. I bought it at 83, like 83.13 or something yesterday. And I'm looking to take this back to a pocket and a pivot. I'm still going to hold New Zealand CAD long, Aussie CAD long. I'm fine with those. New Zealand yen, wait. New Zealand dollar. We might be dropping into 6,400 to 6,200. We're still in a pretty big channel here, but we have a massive pocket all the way back here to June 2020. So we could be filling this area. There's a big demand level down here, also a nice pocket. I would be looking to scoop up some trades in there. And hopefully this is just a range bound trade. If we drop a little bit lower and a little bit more aggressively, fill that pocket area around 6,200 and then jump back up to the channel highs at 68. Let's make some pips on that. And then dollar CAD, I'm going to keep an eye on this one. I want to sell this one around 2,900, 2,950. It's already made a nice little U-turn though. So right there, we had highs at 28.50, just shy of 2,900. I was hoping I could get filled at 29 to 29.50. I did not. So right now this trade is just slipping through the fingers, but I'm not going to chase it. This isn't the trade I'm after. I want to see if we get the highs to sell and we can trade this range. So there's essentially resistance at 29.50 and support around 24.50. And we'll see if that stays true. Dollar Swiss, I'm out of this position. I had robots close up for profit 96.50. Everything that I've traded on dollar Swiss for the last year is now closed at 96.50. So the trade is done. Symmetry's been hit. Now we're at 97 plus. I still like buying this on dips. If we pull back to 94.50, I'm going to buy some more. We pull back deeper, I'm going to buy some more. We have a lot of pivot alignments to the downside. I hope we have a drop. So anybody that's been in this trade, check this out. This was part of my top weekly picks. Anybody that's been in dollar Swiss, we bought breakout trades. We bought dips. We absolutely crushed it on this trade. Take profit anytime you want. 96.50 was my target. There you go. Okay. I'm not selling dollar Swiss. Okay. I'd rather buy euro dollar than sell dollar Swiss. Dollar yen, we're trading at 130.34. Overbought conditions, but notice, no trend line break. Not yet. Without a trend line break, there's no confirmation to jump in aggressively short on this dollar yen. Wait. Okay, look left. I'm still looking left. We have 135 is not that far away. I mean, this is just insane, right? I mean, got to zoom in here on the weekly time frame. 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks in a row, straight up. Again, 8 weeks in a row straight up is not a normal movement. Very inefficient. The last time we did that, we had this massive move to the upside. It dropped. Massive move to the upside. It dropped. Massive move to the upside. It dropped. It does take time. Massive move to the upside. It drops, right? It can happen. So we took out this recent high. This is my next major level, right around 135. If it comes all the way up to 140 plus, okay, fine. But I mean, we are looking at essentially a broken, irrational move that's going to have to balance at some point. But it just depends on how ugly it gets and how painful it gets for traders. For me, it's not that bad. I'm in a drawdown, but it's manageable. So we'll find out. But I'm looking for this trend line to break. If we get confirmation on the trend line break, I'm at least looking for a 1, 2, 3 correction to the downside. Okay. All right. That's that. I do have some stocks I'd like to quickly go through, like very quickly, because I have a class at the top of the hour, and we'll discuss inequities on demand. Just some quick expirations. I'm hoping I can lose some stocks this week in a good way. When I say lose stocks, I mean covered calls that get called away. That would include if we have an uptick on Airbnb. We're trading at 160.76. Frick, yes. I've got a 160 covered call. Let me fricking lose this stock. I've got this thing drilled down to like 148. I would love to lose this stock this week for $12 plus a share. Come on. Please hold above 160. That would be awesome. Awesome. That's like, I'm really excited about that. I got like a couple thousand shares in Airbnb. Let's go. Next up, we have Delta. I could roll this. We're at 44.70. I may roll this because I have a $37 call. I've drilled the cost down to $30.49. I could roll it out to next week and maybe grab another 50 plus cents. We'll talk about this at the top of the hour. So again, could I drill my cost down and have my break even be below 30 bucks? Grab a full $7 plus by next Friday? Could be worth it. It depends on if the broker gives me that credit. I like seeing the uptick today. It's 44.64. We have a nice little push on the markets today. Delta could be one that I lose. Intel's trading at 44 and change. Benji, what's up, bro? Huh? All right, my dog wants to say hi. Get up here, bro. Okay. He feels like he's in the trading mood now. Intel, 44.29 current price. I had this one covered out to 51 as a repair. I'm not going to lose it, right? I'm just going to lower my cost, which is fine. Next up, I have KHC and Johnson & Johnson. KHC at 43.50. I've got a covered call at 42.50. I could lose the stock today. Also, a couple thousand shares. I drilled my cost down to like $37, so I'll make $5 plus a share hopefully today. Good. I want to get some of that capital back. I want that to be free capital to apply. International Paper, IP. This one's at 47. I've got a $48 call today. Come on, bruh. 13 cents. That's all I need, IP. You can do it. If not, I'll just lower it and do it again. Johnson & Johnson, 182.50. You got to be kidding me, man. You can't hang on to this 182.50 level? All right. So if we get above 182.50, I was trying to lose this one this week for $30 plus a share. I'll wait, I guess. So KHC potential, SLB, what are we doing here? We're pushing up. We've got a $46 call out to next Friday. Earnings as well. All right, so Airbnb could be great. Hold above 160, please. I'd love to get rid of that stock. IP, if we go up 13 cents. Delta, I may roll it if I get a decent premium on it. I'm not sure. KHC, looks like I could lose that one as well. X, I've got a covered call. I'm probably not going to lose that one. That was a $39 or $40 covered call. We're at 34.06. Yeah, $40 call for this Friday. That's going to lower the cost. Micron, are we back above $70? Micron is at 70 F. Yes. All right, we're going to take this one. This is going to be a great trade. We should close this one today. If the spread's not too wide, we should close this one for over $1 plus credit. Our initial trade was going to be, man, this thing is screaming to the upside. Our initial trade was going to be our remainder credit was 90 cents. We come into the markets now. I'm going to try to close this out for maybe $1.10, $1.20 instead of the 90-cent remainder profit. So Micron's looking great because I was a little worried that we're going to have to take assignment, which again wasn't a huge deal. Our break even was going to be 68.10, but good looking trade. So things are looking good with the expirations. All right, I'm going to let you go. Take a little break, finish my coffee, get the stock charts up, and nice to see everybody. It's been a long week. Got back last night at like 1 a.m., but got back up to sleep, and I feel a lot better being in the home office. Everything is back to normal. Working on a laptop, being in an office that's not mine, it's always an adjustment. But nice to see everybody. I appreciate everyone being here live. Check it out. Hit the thumbs up button for me. Help the algorithm, support the channel. And we'll be back next week, Monday and Friday, for the Pulver Report. And good stuff. I'll see you all next week in Flex. I'll see you next week in Equities on Demand. See you in the next 15 minutes for Equities on Demand as well. All right, everybody. Thank you very much. Have a great weekend. Happy Friday. Bye.